So the hits keep on coming, so to speak. I've been out here for the last few weeks bringing the private credit situations, developments to your attention. That, as you can see, the mainstream media really is not covering. The financial channels really is not covering. Right now, of course, today's big story is that the Congress is working to end the government shutdown, and you're seeing pretty much a rally across all asset classes, the market, especially the NASDAQ, gold, silver, Bitcoin, Ethereum, XRP. But let me share a story with you that I just pulled this morning from Bloomberg, and it talks about Blackrock, talks about them now facing 100% loss on a pretty big investment they made, private loan, private credit, and of course the borrower has gone belly up. They filed bankruptcy. Before I jump in the article, as I always humbly ask, if you're not subscribed to the channel, please hit the subscribe button for me so we can keep growing the community. And welcome to all of the recent subscribers that are watching the program. I really appreciate you. So the title of the story for today, and the reason for the thumbnail, is when this thing picks up steam and starts to truly unravel, I think it's going to boggle the minds of most people, and how it immediately has, I'm just giving you a layperson's perspective, how immediately it's going to have an impact on markets, okay, especially the stock market. And you're going to have a sudden, like, gotcha moment where there's a realization that everything is not fine, no matter how many CEOs, CFOs come out of publicly traded companies over the last couple of weeks to say, look, there's nothing wrong, a couple isolated incidents, no cause for alarm. We are projecting massive gains going to the end of the year and into next year. So here's the story. BlackRock faces 100% loss on private loan, adding to credit market pain. It says about a month ago, BlackRock Inc. deemed the private debt it had extended to Renovo Home Partners, a struggling home improvement company, to be worth 100 cents on the dollar, meaning that they expected that they would be repaid the entire amount of their loan. 1 month ago. As of last week, the firm had a new assessment. The chances of them being repaid any of their money went to zero. It says the drastic revision comes as Dallas-based Renovo, a roll-up of regional kitchen and bathroom remodeling businesses created by private equity firm, again, private equity. This is something we need to be watching. That's the common theme. Private equity firm Audax, AUDAX Group, in 2022, abruptly filed for bankruptcy last week, indicating plans to shut down. You know, in terms of like what people see, okay, and what the markets see, abruptly filing for bankruptcy, you hear that all the time. But you understand that that doesn't happen overnight. You don't wake up one morning and say, oh, we need to file bankruptcy today. All right. The books have been bad, things have been souring for some time, but as always, the general public, the investors, are kept in the dark until they basically lose the entire value of either their investment or their loan. So BlackRock held, here's the amount, here's the number. BlackRock held the majority of Renovo's roughly $150 million of private debt, while Apollo Global Management Inc.'s Midcap Financial and Oaktree Capital Management held smaller chunks, according to the people with knowledge of the matter who asked not to be identified, discussing a private transaction. So we have BlackRock is in for $150 million. They're going to get zero. Apollo Global Management, Midcap Inc.'s Midcap Financial, and Oaktree Capital. I'm going to start covering Apollo Global and Oaktree Capital. They are proliferating throughout this private credit situation, and you're going to see their name start to surface a lot more. And you might think, well, $150 million to BlackRock's no big deal. But the issue is it becomes cumulative. It's 150 million here, 250 million there, $500 million here. It's going to add up, okay? And it will eventually, from my perspective, have an impact on share price of the big companies like a Blackrock. But some of the other ones that are not big, it could also tank those, all right? It was no mystery to Renovo. It was no mystery Renovo was in a tough spot. In April, lenders had agreed to take losses and convert some of their loans into equity as part of a recapitalization that was supposed to give the company a chance to turn its business around, the people said. In the third quarter, they also allowed for deferred cash interest payments on its restructured debt. And here we go. We did a show on this last week. Arrangement known as payment in kind, regulatory filings now show. Go back and look at last week's show about payment in kind, right? PIK financing. It's when the lender goes to the borrower and says, well, you owe us this money on the loans come due, or the interest is due, and the borrower says, I have no money. The lender says, okay, no problem. We'll amend the loan documents, and we'll just stick that interest on the back of the loan through an amended loan agreement. Of course, the banks get more interest and fees and all that kind of stuff, but it saves the borrower from being officially in default and potentially losing the collateral it's pledged, if it even has any value. And more importantly, it lets the Blackrocks show on their books that, hey, these loans are in good standing. They're not in default, but they are. There's the rate of shadow defaults, right, in the system is also growing exponentially. So again, back in April, they had agreed, evidently, lenders, including BlackRock, to rework the loan transaction. Well, then how come a month ago they deemed the private debt that they extended to Renovo to be worth 100 cents on the dollar or par on their books? How is that? If, obviously they knew what was going on back in April because they agreed to restructure the loan according to how I'm reading this or this article. So it's always this extend and pretend from everybody's perspective. The borrower, yeah, we're going to turn things around. Guys, I've been doing business law and litigation work for 30 years now. I hate to sound negative, but the reality is most businesses don't just turn things around. If their model's flawed, if it relies on, consumers buying or some kind of a unique, what else, a unique model. The point is that I rarely see a business come in and say, well, we're going to turn it around. What ends up happening is it ends up failing. All you do is delay the inevitable, okay? So let me continue with the article. It says, yet at the end of September, funds managed by BlackRock and MidCap Financial were still making the new Renovo debt, we're still marking, here we go, the new Renovo debt, because that's the PIK, they call it new debt, new financing, debt at par, right? Which typically indicates investors expect to be paid back in full. It took only a few weeks for the situation to quickly unravel. Hence the thumbnail on the photo today, or the title for the thumbnail. Early in the fourth quarter, company-specific performance and liquidity issues led the Renovo board to determine that the best available path forward was a liquidation process. According to Philip Sang, CEO of BlackRock TCP Capital Corp, said during an earnings call, we expect to fully write down this position in the fourth quarter 2025. Fully write it down, meaning they're planning to get zero on their $150 million investment. That's probably more than that. They probably extended more money as part of the new financing. Apollo's Ted McNulty, a managing director, said during an earnings call for the MidCap Financial Investment Corp fund that the firm became aware that Renovo would be filing for bankruptcy at the end of October. Spokespeople for BlackRock and Apollo declined to comment further. A representative for Oaktree declined to comment. Yeah, you always hear that, right? Because they're going to come out and say, well, we're shocked. We didn't know this was going to happen. While the Renovo debt represents a sliver of total assets for the three lenders, its sudden collapse strikes at the heart of what critics see as a major vulnerability in the private credit market. The disconnect between the valuation of illiquid loans and the performance of the underlying companies. All right, let me repeat that. There's a disconnect between the valuation of illiquid loans and the performance of the underlying companies. That is the theme we're seeing. Zips Car Wash similarly enjoyed marks that were near par from its private credit lenders months before filing for bankruptcy earlier this year. So, as it also comes in the wake of the collapses of subprime auto lender Tricolor Holdings and car parts manufacturer First Brands Group, which have caught investors off guard. How long are we going to be hearing that investors are caught off guard in the end of this year, next year, the year after? They're always going to say they're caught off guard. It's already out there now, okay? It's just that's not being covered. And by the way, I covered that KKR yesterday on the video. If you didn't see it, go back and check it out. And their involvement and their investors, right? They're taking money from pension funds, some life insurance companies. They take that money; those are their investors, and then they lend it out in private credit deals. Okay. Now, I don't know if these Blackrock funds are Blackrock's money or if they have investors that they have to then make sure those monies get repaid to. I'm assuming, and maybe I'm incorrect, it's Blackrock's funds. But yesterday, KKR. I shared the story. Their CEO was out last Friday saying that there's no cause for concern in the private credit market. And I wanted to mention this on yesterday's video, and I basically dropped the ball. I forgot. But how is it that KKR CEO can make that statement? How does this guy know, or any of these CEOs know what is in the system? How much contagion there is among hundreds and thousands of companies that are involved either as borrower or lender in these private credit transactions? The answer is they can't. They don't know what's in the system. So when you get a guy coming out and saying, look, there's no reason for concern here, you have to understand that they're expecting the gullible. And guys, over 30 years as a practicing lawyer, you would think that the people with the biggest wallets, are the smartest guys in the room, or that have the most assets or the most real estate, doing the most deals. And it's shocking to me that a lot of times they aren't. Sometimes they're the most gullible and they don't understand the big picture, or they're just blind to it, or they don't want to see what's going on. Either way, KKR's CEO, I wonder if he knew about the Blackrock situation here. Anyway, to finish this up, it says Renovo's main borrowing entity, Home Renew Buyer Inc., filed for Chapter 7 last week, listing liabilities of between $100 million and $500 million and assets of under $50,000. Think about that. Assets of less than $50,000, but liabilities of $500 million. And so of that $500 million, we know BlackRock's $150,000. We don't know how much the other two are, okay? And that is Apollo Global and Oak Tree Capital, but they've got a piece of that $500 million of, let's say, debt also. So how does a company get so levered up and go and get these loans from these lenders like BlackRock and others when they don't have any assets? Again, you don't just suddenly have $50,000 in assets. Somehow they obtain the loans. Anyway, this thing is collapsing, folks. I hope you'll stick with me and keep watching the shows. Subscribe to the channel. Hit me the like if you enjoy the content, because we're just getting warmed up on this, unfortunately. And the final quote from the article is, we view this outcome as a result of issues specific to the issuer rather than a reflection of broader sector weakness. And that's, again, Mr. Singh saying about Renovo during their earnings call for BlackRock. So once again, the final salvo is this is an isolated event, right? There's nothing else like it. What we heard, didn't we hear that 2 weeks ago and 3 weeks ago when we heard about the blow up that happened with Zion's Bank, okay, and with Cal Bank and Trust, and then the car parts failures? The story never changes. You get the same BS comments, the same look over here, don't look here. Pay attention, guys. I'll keep covering this. Thank you again for being here, for watching, subscribing, liking, and I will talk to you all soon. Bye.